Welcome back to another episode of Cashing Out. I'm your host, Billy Alvaro with Easy Sell Property Solutions. You can find us on the web at easysell411.com, or you can reach us by phone 631-400-EASY. If you don't know us, we are Long Island's #1 all-cash house buyer. We buy properties all cash every day, any condition. So if you have a property you're looking to sell, give me a call today. My staff are more than happy to help you. 631-400-EASY. Today, I have a very special guest from South Fork Funding. His name is Larry McDonnell. Larry, how you doing?
I'm good, Billy. Thank you for having me.
Thanks for coming on, Larry. So the reason why I have Larry on the show today is we've been speaking a lot over the last couple of radio shows in regards to how, if we're buying for cash, how we are able to close quickly. And if you're going to sell your property to somebody who's going to get a mortgage, what could possibly happen? And there's a lot of things that could happen. And that's why I have Larry here, because Larry owns a company called South Fork Funding. You can find him online at southforkfunding.com. or by telephone 631-389-2250. And so Larry, let's get right into the meat of it. We have a house flipping company. We buy properties all day, every day for cash. And the reason why we're able to buy a tremendous amount of properties is because we don't have to rely on a mortgage company to get our mortgages done. If the people who are listening wanted to sell their house and they said, you know what, I don't want to sell for all cash. I'm going to go down the road and sell it to somebody who's going to have to get a mortgage. Let's talk about the differences between a mortgage company like yours who actually does the right thing in the beginning. You guys pre-underwrite a file, right, to make sure these people are pre-approved and they can actually afford the house.
Of course.
So let's talk about that. What's the difference between a pre-approval and like a pre-underwrite? Because I know you guys like almost pre-underwrite the files.
Well, based on a clientele that we have coming in and the amount of competition that's out there, we try to get people in, go over everything with them, the income, the assets, the credit, coach them on where they need to be to keep the credit scores higher.
That's important, keeping the credit scores high.
It gives us a lot more opportunities for different kind of lenders to come in and give a better deal for our client.
So somebody comes in, they go through your pre-approval process, and you see that they can afford a house. Now let's say they are looking to buy a property. They make an offer. What are the challenges that you've seen, not on your end, on the mortgage side, but with the buyers who they don't listen? Like, how are the mortgages getting screwed up? Because I've had clients where we're selling properties, and the buyers of these properties, all of a sudden, 2.5 months into the process, we think they're ready to close, the mortgage company calls me up and says, I'm sorry, he's been denied for his loan. But I said he was approved just a month and a half ago. How could he be denied now? How are these people getting denied? What are they doing that's causing them not to be able to get approved for a mortgage?
Well, a lot of times that they're coming in, they're getting pre-approved through a company online. It's telling them you're approved based on just a basic application that's online.
Never so like a lending tree, something
like that. A lending
like
tree, a Quicken Loan,
right.
Something like that. A Teachers Federal Credit Union, a Bethpage Credit Union, where you think you're getting a great deal, but there's nobody really walking you through the process. So in general, you fill out a quick app, you're ready to go, you go into contract thinking you're going to be pre-approved, and then 30, 60 days down the line, you find out that your credit scores don't meet the criteria, your job, you haven't been on for 2 years or more, you have student loan debt that they're not amortizing right on monthly payments. I mean, there's so many different avenues we can go down if we don't pre-underwrite the file. With the level of competition that's out there right now on houses, and if you're not prepared, you're going to lose the deal.
You're going to lose it. And so if you're listening out there and you're deciding if you should sell your house to somebody who's all cash or somebody who's going to have to get a mortgage, pay special attention. The reason why we're able to get you out of the situation that you're in, the reason why we're able to close quickly is because we don't have to rely on a mortgage bank to get our money. Now, it doesn't mean mortgage banks are bad or mortgage brokers are bad. It just means that if the loan officer or the bank that your buyer is working with is not up to speed with the rules and regulations, with the underwriting guidelines, you're putting yourself in jeopardy. I've had clients myself that were buying their own houses, and literally 90 days into it, we think we're going to close, and all of a sudden the deal blows up. One of them, let's talk about issues in regards to credit. Let's talk about the credit issue. So we had a client who, they were ready to close. The bank re-pulled the credit right before the closing just to make sure everything was good. Found out that he took out a brand new car. His debt-to-income ratios went up by, I don't know, I think his back end was like 65. And it completely killed the deal. Overnight, he was denied for his mortgage. We had to start all over. You experienced stuff like this?
I have in the beginning stages of a process of a loan going through. But in general, if we sit them down the right way, we tell them, do not run up any more credit card debt. Do not apply for any more debt.
Right. So Larry's company does things actually the right way. Like, this is the right way to do it. He coaches his buyers up front on what to do and what not to do. And that's key. But you, as the home seller, if you're relying on a third party to get your buyer approved, you don't know if it's going to be Larry from South Fork Funding. You could be dealing with some guy who just went on the Quicken Loans, like Larry said, got a pre-approval from a computer-generated offer, and now when it goes into underwriting, these deals are blowing up. It's ridiculous. It actually kills the whole thing. Now they have to start over. They have another 3 months worth of holding costs. The worst thing is if they sold their property and they have another property they're moving into, and the deal blows up,
They got nowhere to go.
they got nowhere to go. You're starting over. You're literally starting over, folks. So if you have a house that you're looking to sell for cash, if you have a house in any situation, if the house needs work, if the house is a foreclosure, if you're behind on your payments, if you inherited a property, if you have a house that has, I don't know, an extension that was done illegally, you have mold in the property, give me a call at the office, 631-400-EASY, or go online at easysell411.com. Literally takes you 15 minutes of your time to make this happen. Now, if you're out there and you're looking to buy a property right now, I would tell you to pull over if you're in your car and take down Larry's number from South Fork Funding. He is literally one of Long Island's #1 mortgage brokers. I do a ton of business with him for one reason and one reason only, because he gets the deals done. He doesn't say he's going to do something and not follow through. If he tells you he's going to get this deal approved, as long as you follow his guidelines, his coaching recommendations, if you follow it, he's going to be able to get you a mortgage at a very, very attractive rate. I mean, what are rates at right now?
Oh, FHA, first-time home buyers, 3.5%, good credit.
3.5%. And you guys do like buyer credits or something?
We do buy credits. We got a 1% down program where we'll give you a 2% credit.
What does that mean, 2% credits?
A
People out there don't
2%
know.
credit, which will give you the other 2% plus your 1%. We'll give you the 3% minimum down payment.
So it's almost like a gift that you give them.
It's like a gift that I'm giving them. Yeah,
It's like a rebate.
it's a rebate.
So they really only have to commit 1% of their own money.
1% of their own money.
Wow. Wow. That's a really good mortgage program
It's
for
a
first time home
great
buyers.
program,
And that's
yes.
through the FHA?
No, it's not.
It's not through FHA.
It is not. It is not.
So the guidelines are a little looser in the last couple of years. They've started to loosen up again.
With that's more of a little tailored to a better borrower. Good credit, income's good.
Right.
It's a conventional loan, but it gets you into a situation because every time when you move into a house, you're gonna have unexpected expenses come up. You need new furniture. You gotta buy stuff. You
Sure.
gotta start mowing a lawn. You know, things that are there. So saving your money and getting into something with a little bit cheaper and a couple different options is a great way to go.
Now, your company deals with a broad spectrum of credit clientele, right? Like, so let's talk about that. What's the lowest credit score you could work with somebody right now?
Oh, we can go down to 500 with the right explanation letters, divorces, health issues, explainable issues in the past, and give people a break to move into a new house.
So if they have a lower credit score, but they actually have a good explanation and something to support that explanation, some sort of proof to back it up,
Of course.
you're able to get them a decent mortgage.
Exactly.
So this isn't like back in the day where if you had a pulse you can get a mortgage. Things back in like 2005, 2006 when the industry was absolutely crazy. It's not like that. You still have to qualify.
You still have to qualify. You need income, you need assets, and you need credit.
So listen, if you're out and if you are looking to buy a property, today's special guest is Larry McDonnell from South Fork Funding. You can find him online at southforkfunding.com or 631-389-2250. If you're looking to buy a house, if you're a first-time home buyer, if you're moving up, you're selling a property, moving into another one. If you're an investor looking for an investor loan, give Larry a call at South Fork Funding. I'm telling you 100%. I don't endorse a lot of people at all. Larry, you know that. I am not a big endorsement type guy. But when I put something through a company and I get results, I'm going to brag about that person. Just like I brag about JP Fidisco. The guy got me in the best shape of my life.
Unbelievable.
I brag about that guy because he got me results. Like you with the mortgage company, you're getting results. If you have a property that you're looking to sell and you want to get a fast cash offer, give my team a call at the office, 631-400-EASY, or find us online at easysell411.com. We literally are Long Island's #1 all-cash house buyer. Larry, you know me for how many years now? Is it 8, 9?
Probably closer to 10.
10 years. And you know, the reason why Larry and I connected is we both do business in an honest, ethical, above board manner. That's who I surround myself with. That's who Larry surrounds himself with, and that's the reason he's on the show today. Larry, in regards to people who are looking to buy a house for the first time, do you deal with Long Island, all of New York, anywhere in New York?
Anywhere in New York.
Are you licensed in any other states, or is it just New
No,
York?
we're just concentrating on our bread and butter, New York State.
See, that's key. So he is Long Island, New York's #1 mortgage broker for a reason, because he focuses on the niche right here in his backyard. He takes care of the families and the friends in New York who are looking to to do purchases. You also do refis, don't you?
We do refis.
Small part of your business, though.
Small part of the business in this day and age, yeah.
Right.
Just cash out, people that want adjustable mortgages, people looking to get rid of mortgage insurance.
Right, that's a big one.
You know, any type of renovation process, things like that they want to move forward with.
I like it. I like it. Again, if you have a property that you are looking to refinance or purchase, give Larry McDonnell a call, South Fork Funding, southforkfunding.com, or 631-389-2250. I'm Billy Alvaro. This is Cashing Out. We will be right back right after these messages. Welcome back. This is Billy Alvaro, your host with Cashing Out. We own a company called Easy Sell Property Solutions. If you have a house you're looking to sell, you know where to find us. Online, easysell411.com or 631-400-EASY. Today, my special guest is Larry McDonnell from South Fork Funding. Larry owns a mortgage company right over here in Bohemia, New York. He is Long Island's #1 mortgage broker for a reason, because he focuses solely in this area, and he's been in business. You've been doing this business for what, 18, 20 years?
No, a little over 20 years.
Over 20 years.
1994.
You still look like a kid, for Christ's sake.
Thanks, buddy.
Oil of Olay, what's your secret?
I can't give it up. A little shea butter, a little vitamin C.
So, I had Larry on the show today for a reason. One, because he's honest, he's ethical. He's done a lot of business for me, for my buyers. We kind of try to get our buyers to utilize his company over there with a gentleman by the name of Andy. We also have Steve from his office who's here with us today. Steve, how are you?
Very good. How are you?
All right, Steve's mic is not on, but that's fine.
Okay.
So listen, I want to specifically in this segment, Larry, I want to talk about how people who are buying a house, and I want to dive deep on how the mortgage process gets screwed up and how they end up not being able to get qualified for that property. So let's talk about one where they start, and this goes on a lot, they start going out there and they start taking on additional credit. So what have you seen happen with that, where they are in the process of buying a mortgage, they either go out and they buy a car, they finance furniture for the house. Like, how bad is that to do? Because it really screws the process up.
Oh, it changes everything from a credit profile. You're adding more debt, your credit scores come down, and you're taking a chance of not being able to qualify.
So the credit scores come down because what? The companies who they're getting credit from?
Well, they're going to report to the credit agency, and you're increasing debt load.
Yeah, so that's a problem.
It's a big problem.
It's a big problem. So if you're out there and if somebody's looking to buy a house and they're in the process of doing this, and the wife is very excited, she wants to go out, she wants to go to one of these, one of these furniture companies and buy and furnish the whole house, and they want to do it on credit, you would tell them what?
I would tell them no and wait.
Exactly. And the reason being is the credit score is going to drop, they're going to have an increase in their credit, and they're going to have a higher debt load. So if they have a property, if they have a mortgage and they're getting qualified, and their debt-to-income ratio, what is a debt-to-income ratio? Let's get people educated.
Well, a debt-to-income ratio is two factors into calculating whether you qualify for a mortgage, which is the mortgage payment against your income,
Mm-hmm.
and your mortgage payment and your debt towards your total income. We take factors, we take credit profiles and everything else to determine if people are able to qualify.
So if you have a property, a buyer that's buying, and they're pretty tight with their debt-to-income ratios, let's just say the threshold is a 50, and they're at like a 48.
We can go to 55 on FHA.
Okay, so you can go as high as 55, but if they're right there on the threshold and they're excited and they go out and they don't tell you, and they go and buy a car, and that car is $450 a month, that is going to kill their debt-to-income ratio, which is going to then deny them for the mortgage. Is that right?
Every time.
Yeah, and so, it's the key thing. If you're buying a property, you have got to get with a mortgage brokerage company that is going to coach you on what to do and what not to do. I can't stress this enough. You can't go out there and just do things on your own without having a coach. And Larry's company, the reason why he's so successful, and he don't even market his company, he has a ton of people walking through his door as referrals. That right there alone should tell you what kind of company he has. When you're basing all your business, your new business coming in on past referrals, it says something about the person. He gets that because he coaches his clients where they could have gone down the wrong path, he steers them back on the right path. You're almost like a consultant with these people, right? I mean,
well, we start them from the beginning. Sit down with them. We do the pre-approval. We sit them in a conference room. We figure out the payments where they need to be at and where they really want to be at.
Key.
I have people all the time go out shopping, looking at houses, spending weekends going to open houses, and never really find out if they even qualify.
Right. Yeah, that's one of the other things they found that kills deals is the buyers of the property, or the mortgage broker, or the mortgage guy who's the loan officer who's dealing with them. They'll tell them they're pre-qualified for a mortgage payment of X, but what they don't tell them is your taxes can't exceed $8,000 a year. They don't tell them that. They just forget to tell them about the tax piece. So these poor people go out, they make an offer on a property, they love the house, it's in the right price range, but their freaking property taxes end up being $13,000. What does that do to the deal?
Well, that kills the deal. That's why we spend the time backtracking out to a payment.
Smart.
Not a dollar amount, a payment.
A payment.
A payment, because everything changes from property to property. Taxes could range from anywhere from $6,000 for properties out east to $20,000, depending on where you're looking to buy.
Right.
You know, and especially in that first-time home buyer situation, you really need to coach them. You need to sit them down, hold their hands, go over everything, because unexpected debt comes up too. They've never mowed a lawn before. They never put oil in their tanks.
Mm-hmm.
So they have to be comfortable where they're at on a payment. Just because you qualify for a certain amount of money doesn't mean that's where you want to be.
But that could possibly kill the deal, like you said. Higher taxes, they don't realize if they're not going to a mortgage company or a loan officer who's going to coach them and consult them the way you guys do up front, and they just say, you know, you can afford a payment of X, but they don't tell them your taxes can't be higher than $8,000.
Well, it's not even a payment. They're just telling them a purchase price.
You're right. They just tell them a purchase price.
That's
exactly.
it. $330. That's it. And you're
That's
ready
your
to
max,
go.
right.
That's your max. And then that's based on a certain number. Now that taxes could be $12,000 or it could be $7,000.
So if you're listening and you're a person who's selling your property, you really want to pay special attention to this episode, because these are the hurdles that you're going to face when you're selling your property to somebody who's going to get a mortgage. You have zero control, first off, over what mortgage company they go to. You have no idea of the loan officer that your buyer is going to be using. This loan officer could be 100% brand new. He could be in the field for 2 weeks, not understand anything, and he could just be writing loans and telling people they're approved when in essence they're not. That is going to affect you. It's going to affect your family. It's going to affect your sales date. It's going to affect your sales price. It's going to affect everything. So take what I'm saying, listen to it. You have two options. If you're going to sell your property, you have the option of selling it to somebody like myself who's going to buy it for all cash. And I'm telling you, if we buy it for all cash, there is zero headache, zero hassle. It's 100% hassle-free, because we're using our own cash to buy this. You don't have to worry about us getting pre-approved for a mortgage and then saying we don't have the money to close or our credit's been denied because our credit score's dropped. Not going to happen with us. On the flip side, if you're selling your property and you're going to be getting somebody who's going to buy it is going to get a mortgage, because that's the road you're going down, you have really got to make sure who they're going to is a reputable mortgage company. And not only that, the loan officer who's doing the mortgage is reputable, because you're selling your biggest, largest asset that you're ever going to have. You don't want this deal to get screwed up. I've seen it so many times, Larry, with the property buyer, the sellers, they've thrown their hands in the air. We've bought more properties over the last 2 years from sellers that had a regular buyer on the property, and they've been dragged through the mud, and they're like, you know what, it's 6 months. My buyers, 2 of them have been denied twice. I'm done. I just want to sell for cash.
And the problem is you run into that domino effect, because if I'm selling a property to you, I'm going somewhere else.
Yep.
So I'm already set myself up in a contract to be on another property. So now I'm going to risk my down payment, because I probably don't have a mortgage contingency in my contract based on the sale of my house.
Yep.
So when you lose control of that, and you don't have any communication with the other side, the loan officer, the real estate agent, really has no idea where these people are going and the status of the loan as we're going through. Like, you can call my company 24/7, get an update on your file.
Oh, we have.
Oh, we have. I know.
We have. But you guys run things differently, and that's what I like about you.
We do. And you explain everything, even to our referral partners, our flippers, our real estate agents. Certain times, like an FHA loan, when you're flipping a property, you can't go into contract for 90 days.
Right.
A conventional loan, you can go into contract right away.
Yep.
No issues.
No
No
issues
second
at all.
appraisal. No second appraisals anymore.
Yeah.
As long as we're not over 100% of the finished value or the purchase price from after the beginning.
Yeah, so that's you just made another good point. So if there's anybody out there listening who flips houses like myself, it's very important that you try to get your buyers to use a reputable mortgage company. You can't steer them and demand that they use a mortgage broker of your choice, but you can give them an incentive to do so. You can try to just introduce them and let Larry's company sell them on the fact of why they should use Southport Funding. We've done that a lot. We don't push our buyers to use Larry's company, but once the introduction's made, he's closing 8 out of 10 of them for a reason, because he's honest, he's ethical, he goes in with a consultative approach, he coaches them with exactly what needs to happen, and they feel comfortable. It's almost like you're building a relationship, like a friendship with these people.
It's a lifelong relationship.
Yeah.
I get those people keep coming back. Because
Right.
usually the first house you buy, you're not going to die in anyway.
Right.
So you're going to be
7 years.
upgrading, you're going to be selling, family issues change, kids, blah, blah, blah.
Listen, this was a great educational episode, Larry. I appreciate you coming on. We have about a minute and a half, 2 minutes left. Is there anything else you want to add to the show before we leave?
You know, just give us a call, give us an opportunity, look us up, southforkfunding.com, 631-389-2250, Long Island's discount lender. Give us a call, give us a shot.
Yeah.
I'll meet or beat any deal that you're getting.
And that's key, folks. That is 100% key, because when he says that, and I pressed him on this about 3 years ago, I'm like, how could you put that out there? But I have to tell you, he will take a discount and make less money just to make the deal happen, to beat out his competition. I've seen him do it time and time and time again.
But it's also about establishing a lifelong relationship with
the buyers.
with the client.
Yeah, with the client.
Yeah, exactly. You know,
And
referrals and their friends, their families, everybody else that they send to us after the fact.
kudos to you, brother. You're doing a great job. South Fork Funding. This is Billy Alvaro, Easy Sell Property Solutions. We are cashing out. We are Long Island's #1 all-cash house buyer. Find us online, easysell411.com, or by phone, 631-400-EASY. I'm out. That was good. That was a cute little half hour with you.